Let's call our meeting to order, and I'll ask my colleagues to take their seats, Mr. Brown, at your convenience, just whenever.
Start without my being seated.
And when we did. Mr. Treasurer, I will ask you to call the roll.
Mr. Brown.
Here.
Mr. Cole.
Present.
Mr. Green. Ms. Johnson.
Here.
Mr. Jordan is not here. He said he was not going to be here, my bad. I'm looking. And Mr. Jordan Miller. Here. Okay, you have a quorum.
Thank you, Mr. Treasurer. And so let's take up our meeting minutes from December 12th, and I will entertain a motion that we approve them as presented.
Second.
Moved and seconded. Questions, comments, additions, deletions? Hearing none, seeing none, Mr. Treasurer, you may call the roll.
Mr. Cole.
Yes.
Mr. Green. Yes. Ms. Jordan. Or Ms. Johnson.
Yes.
Mr. Miller.
Yes.
And Mr. Brown.
Yes.
That motion carried.
Thank you very much. Let's move on to our monthly financial report, and I will call on the treasurer to lead us through.
There we go. All right. Thank you very much. This is the monthly financial report for December. This will be reported out to the board at their meeting on January 22nd. As in the past months, revenues year-to-date are above plan and expenditures are running below plan. Cash balance obviously is then ahead of plan. When we get into the revenue line items, the property taxes, there was no activity this past month. We're now into the first half tax collection, and we'll begin receiving advances on those collections this month. Typically, it's generally a March settlement, depending upon whether or not they get an extension, but over the next couple of months, we'll receive advances and then get a settlement. The key here is whether or not this $7.7 million variances we've experienced so far continues to hold true. And as I discussed before, the split between first half and second half, because of changes in the tax code in the end of 2017, could have caused that split to be altered a bit, but we'll see if that works itself out or not, or remains the same. But we'll obviously, in this particular case, since we have two large collections, we really don't know in full how tax collections will end up for the year until we get through this collection period. Advances, so what we report out in January, maybe even in February, really depend upon the flow of advances, and that can fluctuate. So we can't get real disappointed or real excited one way or the other until we actually get settlement, probably in March. But we should be very typically close. State aid was very much on target this month. On about $31 million in receipts, it was just $708,000 above plan, and that brings the year-to-date variance up to about $2.8 million above plan. In the notes, I detail some of the changes that have occurred in the calculation and where we stand. And what we might expect by the end of the year. And essentially, and we are getting to the point here within the next couple of months, and I'll make an actual projection for year-end our results probably in the March, April timeframe as we're dealing with the 5-year forecast. But we do believe that we should end the year several million above plan in state revenue, which is a very, very small percent variance, but we should end above plan on that. All other revenues, that amounts to a fairly sizable amount, but you'll see that it lies solely in other revenues. That the largest variance there, the 13 million, is in other revenues. Others, restricted federal grant, interestingly enough, that's the federal refund on our qualified school construction bonds, or what we call Q-Scoobies. I asked the question of bond counsel whether or not, and we might have a committee member that could help us with that, maybe, whether or not the federal shutdown has delayed that payment. Because if you look in the graph, we were expecting that payment, back in November, and we still have not received it. And I don't think to date we received it. So we're a good, 2 months now past receiving it. Not a large dollar amount, but it is just something that we're looking for and haven't received. Do you have any info on that?
I would say it's going to delay things further. If there was a delay, yes, the federal, they're not making payments, but they're accepting money. So that's what I've been heard.
That is sort of a funny thing. I do some work for my mother, and because she gets a public pension, there's a public pension offset to her Social Security. So I send them this information all the time. So she just recently got a letter. She doesn't get a whole lot, which is another sore point. But it was funny. She got a letter that said, we've reviewed the past couple of years, and we've overpaid you. And at the end of this long letter was a little invoice stub for $9. So I took the stub and wrote a $9 check and mailed it in. And even with the government shut down, my check cleared. So at least I know half of the government's working, the intake. So nothing new on property tax allocation, but the other revenues, I go into some pretty good depth. I think I've got slides on that. I guess I don't have slides on that here. But I do go into depth on what's going on with other revenues. And a lot of it has to do with pilot payments and our estimation thereof. Getting into expenditures, personnel has returned to running under plan this month. As you know, last month, due to some estimation of a 3-pay month, we ended up over plan for the month, but now we're back to running under plan. And as I said before, we anticipate that that should continue to build, and we did factor in, we're coming in under plan into the forecast. So that's where we stand there. Charter schools and related payments are spot on. I look at it every month because it's so close, it's almost uncanny, and I keep questioning it, are we sure that that's right? So I keep looking at it, even though it's very close. But and other expenditures, there's nothing noteworthy there. This is simply a graph of the personnel variances month by month and year to date, just to demonstrate to you that if you look at the monthly, that's the blue bars, that large variance in November brought us pretty close to being on plan, but now we're back to being under plan. Just a graphical demonstration of that. Purchase services still seems to be the leader behind plan, and I discussed some of that in the notes, but there's, in there it's a combination of some over and under, but nothing so far that we found to be alarming in any way or represent some change in behavior that we have to be worried about. I do include budgetary information, because another way to look at this is, where are we on spending our budget? If we're halfway through the year, would you expect us to spend half of our budget? And on a percent of our revised budget expended, we're at about 45.3% overall in non-personnel line items, so that seems to be on track if you believe in that kind of an approach to it. Our spending plan is based upon historical spending patterns, which may or may not hold true of the current year, so that's why we mainly have timing variance issues. But here, it just seems that this is really on track. Well, with encumbrances, we've got about 55% of it encumbered and or spended. So all of it seems to just be moving in the right, on the right pattern. And thus far, unless Scott knows of anything, there hasn't been a particular line item that's jumped at us that's alarming, whether it's over or under budget. I also, in terms of variance analysis, and I've included that in the back of the monthly report, I look at both dollar amount and percent of variance and try and assess it according to that dichotomy of just a high and low. Anything 5% or more in variance would be, I'd call it a high variance. Anything 5 million or above would be a high dollar amount variance. And as you can see, when we look at revenue, property taxes, while they seem to be high in dollar amount, are very, very low in percent variance. State aid really doesn't jump off the page. Now, restricted federal grants, obviously we're 100% under budget, but it's $250,000. So all of this is just intended to kind of focus our attention, and that's why we look at all other revenues, because they're both high in amount and high in percent variances. So I just provide this information just to focus your attention and help you, put these variances in perspective where a high percentage may seem a lot, but if it's not a dollar amount, then maybe you temper that concern, and vice versa. If it's a large percentage with small dollar amount, it works itself out. I also list the percent of total estimated revenue for the year to give you an idea of where we like to focus in on and where, per se, accuracy is most important. Well, we've got almost 55% of our revenue comes from property taxes, so you really want to focus in on that. So that's why watching these advances in this first half settlement is important, because it represents well over half of our revenue. State aid is the other, and you can see there we're pretty close on state aid so far. That's working out. And the rest of them, not a large contributor to our overall revenue. And I understand that if we end up with a $13 million variance in those other revenue line items, which, by the way, $3 million of that is the Medicaid timing issue, which should work itself out so that it's really more like a $10 million. I realize it's a large dollar amount, but overall contributing to the budget, it's just not a huge contributor. We will be talking about these variances as we get into the forecast and whether or not we need to adjust things like our estimate for investment income or our estimates for pilot payment to ramp that up a bit so it flows into the forecast to improve that picture. But you don't want to overdo it, because again, we like to come in over budget on revenue and under budget on expenditures. And this is included here in the slides just as a discussion of those other revenues, the $13 million variance, 3.7 in Medicaid, 6.1 in pilots, and 3.4 in investment income. The one I focus in on pilots is because that's the one that we kind of probably have the best information about, and at least have some data for a couple of years that would tell us what those revenues might be. And when we estimated it, we figured about $2 million in pilot payments, and then in other revenue in lieu of taxes, $2.1 million in win-win. That's dwindling each year as those payments go away, and then $2 million in revenue sharing with the city. Well, just to give you an idea historically how we came up with this, here's the history of, and if we start at the bottom and move up, win-win, you can see it dwindles over the years. And so in 18, when we received 3.1, we estimate 2.1 this year based upon those payments, again, being reduced about, I think it's about 20% each year until they go away. But we have yet to receive that. So our estimate, while it appears to be less than the average, is good reason, because we know they're trending down. Revenue sharing from the city, as you can see, it averages about 1.8, so we estimated $2 million. You might look at this chart and say, well, what happened in 2015 and 2016? And that's a timing issue. I think it came in June instead of July, so it came in the right calendar year, but it crossed my fiscal year. So that's all that is, so that's why that works out. And now for pilots, you can take a look at that. They average 4.4, but they've ranged from 1.2 to 7.7. But admittedly, that is the one number. If you wanted to do the average, maybe we should have estimated 4. We've already received 6.8. But that's a tough one just from this data to predict. So as I mentioned several months ago, we've asked the attorneys that are involved with this to compile a list of their cases and known settlements and the known timing of those payments so that we can use that in our forecast in the future. So that's drilling down pretty deep into the other revenue line. On the non-personnel side, again, looking at highs and lows and the variances, you see the personnel, purchase services, capital outlay, the percent variance is large, but the dollar amount isn't necessarily so. And then other uses, we know that a lot of that has to do with some of the other expenditures that are related to advances and transfers and whatnot that are merely timing, and we typically come in under on those anyway. And so you can see here where 65% of our budget is in personnel, while the variance amount is high, the percentage is low. And then in charter, we're spot on for the other 21%. So for what is that 87% of the budget, we've got variance-wise very low variance percentage, and about $7 million in variance there. Just to kind of put it in perspective, so you can get alarmed where you should and not get alarmed where you shouldn't. So all in all, revenues again above plan, expenditures below plan a bit, and what is it, about $30 million ahead in cash. Again, we get smarter as each month goes by, and I'll be doing a projection for the year end in the next couple of months. So that's the monthly financial report for December, and if you have any questions, I'll be glad to answer them.
Thank you, Mr. Treasurer. Are there any questions for the treasurer on the monthly financial report? Committee members? Seeing none. Thank you, Mr. Treasurer.
Thank you.
Let's move on then. We have a couple FY19 budget requests to contemplate. And is this Budget Director Gooding, is this your part of the show?
It is. I will, thank you very much. I'll introduce this, kind of kick it off, and then turn it over to the respective departments. Just a little bit. I'm not sure if Ms. Johnson and Mr. Green were here when we've gone through these in the past, so I can kind of talk a little bit about our process. On the budget side, we've changed the way that we've budgeted since fiscal year 15, in that with our departments, we've moved away from the normal statutory approval of appropriations at the fund level. On the general fund side, our departments have engaged in what we've kind of called a student-focused program, hybrid zero-based model. That our departments go through a 5-year process that's aligned to the 5-year forecast, that we go through and identify the things we're going to do, changes each and every year for 5 years. So with that said, we don't do what is typical in school districts and kind of do a, here's your budget plus cost of inflation for next year. So we go through each and every year saying what we're going to do. With that, there's no, everything's spelled out. If there are things that come up throughout the year that were not planned for, things that were surprises, costs that may have been higher than what we anticipated, any change to the department budget comes back to the FAC for a presentation. And then from there, FAC will give the thumbs up or thumbs down, and then we'll take it to the board as part of the amended appropriations for the current year. So with this, we have 2 items here, because what we want to do is we've removed any cushion, if you will. Everything's spelled out. And so just for transparency purposes, we bring it here, we talk through it, explain what those changes are. Obviously, folks will look at what their budgets are to make sure that, see, hey, can we accommodate this in our existing budget, or is this truly something we need additional funds for? So we have 2 such items this evening. The first, Dr. Roush will present a legal services request for the Board of Education budget, and then Ms. Van Dyke will present a request regarding cybersecurity and our information technology group. So with that, I'll kind of turn it over to Dr. Roush.
Thank you very much. Last spring, as part of the Superintendent Search, the Board of Education engaged the firm of Taft, Stettinius, Hollister to provide legal representation for them during that search. The search, I think there are a lot of great legal questions. I think the search went on a little bit longer than everyone had anticipated. This is actually, I think, the 4th time I've come back to request an increase in the appropriation here, trying to work upon the best advice of what legal counsel thought the billing would be. So I've actually probably maybe gone a little over, but just because I know that there's still some outstanding questions and some, I think actually as early as last week, or we actually still were having some conversations with Taft. So this should get us through the end of this fiscal year. I kind of want to make sure that this is the last time I have to come back to FAC. Hopefully, as this process is wrapped up, we won't need to be back here. But I do know we have some outstanding bills coming in that we need to get paid, and this will cover that, and then the extra time and phone calls I know that have occurred over the last couple weeks. In short.
Thank you, Dr. Rush. Any questions on that request?
How much is it over, or additional request?
This additional request is for $30,000. I know we've got, in having some conversations with Taft, I believe we have at least another 10,000 plus that will be coming due soon. Not knowing how much more we may need, is I know there have been some outstanding questions regarding the superintendent's contract here and there. I just don't want to come back again. I've kind of relied before on, well, we only think we need this much, well, we think we need this much, and trying to do that. And I'm here the 4th time. So this time I'm, if we go over, it remains in the budget unexpended and rolls over into the next fiscal year. I'd like to put it to bed once and for all this fiscal year.
What was the total?
At this point, this would be at about 130,000 appropriated.
Any other questions? Thank you.
Ms. Van Dyke is coming up to present her request for the Information Technology Group and the Cyber Forensics Security.
Hi, I'm Michelle Van Dyke. For those of you who don't know me, I'm the Director of Technology for the district. So obviously, cybersecurity is a very hot button right now. So this budget request is for, I want to say an increase, but it actually is to fund any cyber investigation that we need to do in the event that we have some kind of an attack, whether it be on our server or through email. We do a number of things in-house prior to, but once we contact the cyber insurance company, then we start the process with their cyber attorneys and the forensic group. So we did not budget for this amount this year. We put a small amount in the budget, not knowing what we would need. So prior to next year's budget, we're asking for an additional $100,000 to fund anything that would come up. And as Eric said, if we don't use the money, it just rolls back into the general fund, and we will be budgeting for that in FY20.
Any questions for Director Van Dyke? Is it my understanding that you and the internal auditor would like to add the Office for Internal Audit to Section 7?
Sure, we
and
absolutely
key
can do that.
personnel?
Mhm.
Okay. How do we effectuate that addition? How do we effectuate that addition to the request?
In that process.
All right, so who will update this document prior to its submission to the board for consideration? Is that the budget director?
will be done.
Okay. Any objection to, so we're talking page 5 of 6 in section 7, the request is made to add to the list of key personnel the Office of Internal Audit so that they are included. Hearing no objection, please add that. Any other questions on this budget request?
Just the next step, assuming that FAC does approve both of these requests, then this will go on the board agenda next week as part of the amended appropriations resolution.
Very good. Thank you, Director Van Dyke. All right, so I think then we'll want a motion to recommend these items to the board, item 4.01 and 4.02. There's a motion, and is there a second? Moved and seconded. Any further discussion on these budget requests? Mr. Treasurer?
Mr. Green? Yes. Ms. Johnson?
Yes.
Mr. Miller?
Yes.
Mr. Brown?
Yes.
Mr. Cole? Yes. Motion carried.
Thank you, Mr. Treasurer. Is there anything else for the good of the order today, committee members? Staff, anything else you'd like to discuss? Yes, sir.
2 items. One, and I probably should have whispered this in your ear, I didn't know if you wanted to recognize the 2 board members that are in attendance here.
I would.
Okay, I'll leave that up to you. You should recognize the 2. Anyway, you can do that in a minute. But secondly, just so you know, the topic at the next FAC meeting will be our discussion about preparing for the issuance of the remaining $50 million of the $125 million Operation Fix-It bond issue. That bond issue was approved in November of 16 for Operation Fix-It, which is a deferred maintenance bond issue. We issued it on a as-needed basis, and based upon all the spend-down requirements, we estimated we could do $75 million within that time period, so we issued $75 million in early 17. And we are projecting to be down to a point where I and our municipal advisors and bond counsel, as well as our facilities team, are comfortable that we're going to need some more money on hand to continue with those projects. So we're going to start that. We started the discussion with our municipal advisors. I'll be here to talk more about that next meeting, board legislation probably in March, and anticipating an issuance of bonds somewhere in the August to October timeframe. But just wanted to give you some heads up on that in terms of what that means for the financing of those projects. And at some point, we've talked about capital budgeting before, but at some point, we'll want to begin some conversations about facilities and what do we do after the operation, fix it. And at least have a conversation here so you know about the need as well as know about some of our financing options and some of the costs related with that. So just want to give you a heads up that that's going to be on next meeting's agenda. I'll probably have our municipal advisors in attendance just in case there's any questions. I've been talking to facilities quite a bit about the capital needs, and it's a big conversation that we probably should begin to initiate here soon.
Very good. Thank you, Mr. Treasurer. If there's nothing else from staff, what I would like to do is recognize Mr. James Ragland, who is down here at the end. So he is a recent addition to the Board of Education. And I also believe that Ms. Jennifer Adair, who just recently added just about an hour and a half ago. This is Jennifer Adair. She is our very newest board member. So I want to thank them both for being here today to observe the committee. And one or both of them may end up serving on the committee at some point. So thank you for being here.
It is one of the best committees, President Baker.
I see, yeah, very well then. Yes, I thought you might think that. It's a very good committee indeed. So if there's nothing else for the good of the order, is there a motion that we adjourn our meeting today?
So moved.
And is there a second? Moved and seconded. Mr. Treasurer?
Mr. Brown?
Sure.
Mr. Cole?
Yes.
Mr. Green? Yes. Ms. Johnson?
Yes.
And Mr. Miller? Motion carried. Thank you very much.
Thank you, everyone. We stand adjourned.